Hey guys, how's it going? Thanks for coming. I'm Nick, and in this video we're going over the pros and cons of our friend Warren Buffett. So I thought this would be pretty cool to look at both sides of someone that everyone knows and loves, because everyone has some pros to them and cons as well. So if you guys want me to go over any other famous person over there, we could certainly do that. So for one, hopefully you could read this. I know my handwriting is terrible. We're learning. However, what I'm going to be doing, we're going to go over the pro, and then I'm going to have a con right afterwards, and we're just going to go down the list of some things that I thought of that we could definitely all learn from. So I have about like 8 for both sides, so let's get into it. So obviously, if you know anything about Warren Buffett, his main strategy is buy and hold. So that's definitely a great strategy a lot of people love. So let's go into if there are some pros and cons. So first pro is that it's super simple. It's really easy, and you could do it monthly. You know, you could dollar cost average, you can invest for your retirement account, your 401ks, your Roth IRAs, or just stocks in general, and just invest every single month for basically your entire life. Super simple, and it works. Now, one side that some people might be possibly concerned of is retired people with this strategy, especially if they're either close to or in retirement. So over the long term, you know, looking at your time horizon, that's fantastic. But you don't have that type of time when you're retired. So if the market drops, you don't really have that 20-year time horizon to rebound. So that buy and hold might be a little iffy when you're kind of later on in life. Now, yes, you probably should have been buying and holding your entire life, so you don't have to, you know, be too concerned about a certain amount drop, especially if you have dividends and other types of income. However, you could definitely see how these types of people could definitely be a little iffy with this buying and hold strategy, especially if it's during like a recession. If you're in retirement and lose 50% of your net worth, that could be concerning, which could easily lead us to the next pro would be it's a great long-term strategy. So kind of like we just said with retired people, is that what they don't have is a long time horizon. So if you are younger the better, start as soon as possible. You know, if you have 20, 30, 40 years to invest, you really don't have to care about much of the ups and downs, and you could even capitalize on the downs. So if you do have that long-term time horizon, you could hugely take advantage of that, and definitely with dividend growth, with compound interest, and you could get some serious money that way. This could then bring us to the next con, is holding while losing. So right now, we could all see what's going on now, is that while stocks drop, you're holding on to that, so you're actually losing money along the way. Now, yes, since you're not selling, you're technically not realizing that loss, which is completely understandable. So if you have that long time horizon, you really shouldn't have to care. However, and what we're going to be getting into in a little bit, is that if you kind of see a market top, you know, things are kind of just been increasing for a very long time, and you don't see that it's just going to continue forever, and you don't know when, but you do know that it might correct at some time. So why would you continue buying and holding while you know there might be some losses in the near future? Now again, yes, this isn't like a super strong con, but you could kind of argue a little bit for it. Some people definitely do. So the idea of why should you hold something when you could avoid those losses and get in a little bit of a cheaper price? Maybe you could hold more cash, which we're going to talk about a little bit, but just understand that you're buying and holding, you're going through all those dips. So if you don't have that time horizon, it might hurt you. The next pro, which would be definitely a highly attractive one, is that you could be a multi-millionaire for either having that buy and hold strategy over the long term, or by simply investing into Warren Buffett's company, Berkshire Hathaway. So, you know, if you start investing in 70s, 80s, 90s, or really at any point, you could definitely make some huge money, and you could have been a multi-millionaire over that time horizon. Which we could then look at another con, is that, well, with Warren Buffett's company, Berkshire Hathaway, they don't pay any dividends. Now, again, this depends on your perspective. I do see that, if a company doesn't pay out the dividends, it would reinvest in the company, which could then grow even faster, which I actually completely agree with. However, there are some dividend investors or people looking for income that they might not like Berkshire Hathaway because they don't have those dividends. So I wouldn't say it's like a good or bad thing. It depends on what you're really looking for. However, Warren Buffett made it pretty clear that he's probably not going to be paying dividends anytime soon. So if you're looking for that benefit of holding the stock, probably not going to come. The next pro, like we kind of mentioned before, is that Warren Buffett right now is holding a lot of cash. And this could be a huge benefit for Mr. Buffett, because we saw in the last recession, 2008, he was one of the only people that actually had cash on hand to buy companies at a discount, help them not completely collapse, and he completely took advantage of that. So we could also learn from that. We could hold cash of our own. So, like for right now, the market is basically collapsing under itself, and it could provide opportunities. While you have cash on hand, you could capitalize on those opportunities just like Warren Buffett. Which a con is that he holds lots of cash. So the bad part to that, which some investors actually kind of hate him for, is that cash doesn't do anything for you. Over the past few years, the market has been continuously going up, and if you're just holding cash, you're not capitalizing on that increase. You're kind of just sitting there, possibly losing money to inflation. So some people don't even like that at all. Some people I might have heard that someone tried to sue them or something like that, but definitely trying to fight back on that. So they don't like the idea of holding a lot of cash. So depending on what you kind of look at, it could be a pro and con. Personally, I think it's more of a pro than a con. Now, kind of getting into more characteristics and personality-wise of Mr. Buffett is his lifestyle. He's one of the richest people in the world. And it's not like he has a lavish, expensive lifestyle. He still lives in his Omaha house, super humble. He doesn't have to do anything crazy. And we could all learn from that. We could understand that even since he's a multi-billionaire, we could still be happy and content with the things that we already have. And I think that's a really good understanding, especially important lesson that we could learn from him. Because, he does have a lot of money, but that's not everything. There is other things to life than money. Moving into the next con is that the returns of Berkshire Hathaway have been closing in on market returns. So earlier on in the fund of Berkshire Hathaway, maybe in 70s, 80s, or what have you, the returns were far greater than the overall market because they were smaller and they could move a little bit easier. Now, since they're so much bigger, they can't just buy a huge portion of a company. They can't have 50% of some large company. They have to limit their buying power to certain companies, so they might not be able to maximize their profits like they once did. So at this point, their returns are actually closing in on what the market's actually returning. Technically, no expense ratios with that. If you buy like a mutual fund that tries, or an ETF that tries to mirror the market, there's slight expense to that, where Berkshire Hathaway, it's a stock. That's a weird why, but another pro for Mr. Buffett is that he's very charitable. He definitely gives a lot of money away, especially when he passes. He plans on giving the majority of his wealth away to other causes. And we could all learn from that as well. Again, kind of going back to the idea of that money isn't everything, and we could be more charitable and just giving not only of our money, but of our time. And he's just not that multi-billionaire that everyone hates and he's just hoarding all his money. No, he's not like that. He actually shares not only his money, but his knowledge. And since I kind of already mentioned it, another pro would be his teachings and his quotes and his strategies. we've all learned tons from Warren Buffett, all the way from like, be fearful when others are greedy, greedy when others are fearful, spend what's left over from saving instead of saving what's left over from spending, and pretend you only had a handful of investments that you could make in your life. So if you only had like 5 investments that you could only make, you would definitely dig deep into each investment to really understand it and to really make money with it. So his teachings and strategies are all out there. There are tons of books, tons of videos that we could all learn and grow from. Next con is kind of a joking matter, is that his diet's pretty bad. I wouldn't really focus on Warren Buffett's diet. He does have like McDonald's every single morning, and if you took on his diet, you probably wouldn't feel too good. And at the same time, if you have lunch with him, it's pretty expensive. Yes, I know it's for charity and everything like that. It is millions, so I wouldn't say it's like a bad investment. So just a little joke there. Relax. So I'll do another con just because I did another pro on the last one, but his successor. So what's going to happen after he retires or passes away? So some people think it's not going to be the same without Warren Buffett. Some people might get out of his fund and something might happen. So that could be seen as a con. However, we have been reassured he did plan for this. You know, he's going to pick someone who has the experience just like him, similar strategy, so it's not like something extremely different is going to come over Berkshire Hathaway. However, there might be something a little different. It's not going to be the same, so some people might think, hey, it might be coming to an end. For me personally, I really don't think so. So sorry if this isn't visually pleasing. I will get different colored markers to kind of make things a little bit easier next time. My other ones are like dead, so I'm only using purple. But I put this across the bottom because this is both a pro and con, depending on how you look at it. He invests in only what he knows and understands. And that's one of his quotes. Invest in what you know. And this is a pro because if you don't know something, then you could lose money in that. Plain and simple. And if you really dig down deep into what you're investing in, you know what's going on, and it makes you invest even more. Even on downturns, you're like, hey, this makes it even more of a buying opportunity, so you buy even more because you know exactly what the business or your strategy entails. At the same time, people could argue that it's a con because he doesn't invest in what he knows. So for example, he missed out on like Amazon and Facebook and Apple in the early stages. Now he has a huge Apple position, but he doesn't really understand technology all too much. So he did miss out on those opportunities. Some people might see that as a con. I don't necessarily think that, because you can still be successful in other ways. Something else might grow separately, but if you stick with your strategy, it works, and you're successful, that's just fine. So what do you guys think of our friend Mr. Warren Buffett? Overall, personally, I think he's a fantastic investor. One of the best, if not the best of all time. He's just fantastic. We could all learn a lot from, and hopefully you guys liked how we broke it down into pros and cons. So if you guys have any other ideas of who we could look at pros and cons, I would love to do a video like that. So if you guys have any questions, comments, or concerns, please leave them down below. Love to hear what you guys have to say. Don't forget to subscribe, hit this video with a thumbs up, and I'll see you guys in the next one.